Nigeria's cement giant recorded a mixed bag of first quarter earnings, with Dangote Cement seeing a recovery in its bottom line despite a lower revenue quarter on quarter. However, the net income of Lafarge saw a 14.9% contraction owing to higher tax expenses. Abigail Alabi, Industrial Goods Analyst for Sub-Saharan Africa at Vertiva, joins me to discuss the numbers and outlook for the sector going forward. Abigail, thank you so much. Pleasure to have you on the show today.
Thank you for having me.
Let's start with, we have had about 3 or 4 earnings, Q1 earnings out so far from the industrials names, but let's focus on Dangote Cement, one of the key players in the sector. Profit after tax up 3% to 109.5 billion. Mixed numbers, largely positive, but we did see some pressure, pain points in the Nigeria operations. Could you just give us a summary of the, some of the key elements?
Okay, so for the Nigerian operations, as we saw in Q1, we had like a nationwide cash shortage, and that also affected the volume output for Dangote Cement. And also due to election uncertainties that happened in Q1, we also saw a slowdown in public and private projects, and that also attributed to the decline in volume we saw for Dangote Cement. So those two factors combined, we saw like a decline in the Nigerian operations by 25%, to about 3.6 million metric tons. However, for the Pan-African operations, we saw that strong performance in those spaces boosted the volumes for that sector. However, Nigerian operations still dragged group revenue for that period, for Q1 period, downwards.
But do you see this continuing, that the pressure point from the Nigerian volumes down 25% year on year?
For the second quarter, we don't see that continuing because we have seen the cash crisis subside. Okay. We also see like a calm political climate as well, and we also see that we are expecting resumption of capital projects by the second half of the year, So we expect that the calmed economic crisis or calm political climate would increase volumes for Dangote Cement. And for last year, we saw that Dangote Cement recorded volume decline because of contraction in gas supply. And however, the management has announced that they are going to see improvements in gas supply this year. So we expect that to boost volume for Dangote Cement in second quarter.
Speaking about energy, because you did put that in your report, some of their pain points, energy inputs. You also mentioned plant maintenance, and unabating haulage expenses. Talk to us about that. Are these pain points that will continue? Well, they've sorted out the energy, but for plant maintenance and haulage expenses, what's the story there?
Okay, so for plant maintenance, most of the spare parts for Dangote Cement, most of the spare parts for the plants in Dangote Cement are imported, and most of them are FX links. And currently, we are having like a severe FX crisis right now. So since most of those products or most of these spare parts are FX linked, the fluctuation in FX is definitely going to affect the cost of those plant maintenance. And also for haulage expenses, we've seen a rapid increase in the price of diesel, and as well the trucks for Dangote Cement is for distribution of cement. However, Dangote Cement has announced that they're going to switch to a compressed natural gas to ensure that the haulage expenses is at least controlled to a certain extent, rather than going fully on diesel.
Now, the industrials index is currently up about just over 11% year to date. I want to talk about the sector in general, but just wrapping up for the Q1 earnings for the rest of the names. From your analysis, what would you say are the key takeaways in terms of, we've seen Dangote's numbers, we've seen the story there, but generally for the sector, for the earnings that have been released so far, what story do the numbers tell us?
Okay, so the numbers just tell how the election has severely, or how the election has impacted both Lafarge and Dangote Cement, the economic uncertainties that also caused a slowdown in public and private projects also caused one of the major causes of volume contraction. However, we also see that that's just like a one-off out of all the strong results we've seen for Dangote Cement and Lafarge. So, however, since this is a temporary setback, we expect Dangote Cement and Lafarge or companies in that sector to come stronger in Q2 and also in the later part of the year.
With that being said, going forward, what in your opinion will separate the winners from the losers, perhaps from a cost efficiency perspective, etc.?
Yeah, so cost is one of the key issues in the cement sector. We have also seen companies like Lafarge and Dangote Cement also ensure that they switch and they move over from fossil fuels to alternative fuels. So Dangote Cement recently recorded an 8.2 thermal substitution in one of their plants, and also shows that they've made concerted efforts to ensure that they substitute fossil fuel, expensive fossil fuel, to cheaper alternative fuels, to optimize the energy mix, and also to ensure that they are also be able to control the cost of production, also ensure that they also control operating expenses as well, because those things are major drivers or things that could threaten profitability margin for both companies.
Let's talk about NGX Industrials Index and sentiments towards index. What investors are buying, fundamentals that they're looking at, P ratio, dividend yield. So, let's start with your own outlook and research so far. What are your projections for the industrial sector in terms of those stocks, those names that you're upbeat about, and the fundamentals that support them?
Okay, so for Dangote Cement and Lafarge, they have been doing impressively well in the past years, and they have strong fundamentals in their revenue. We have seen impressive revenue growth delivered from both companies. We've also seen PAT also grow stronger in past years, and those are key things that investors are also looking at. Investors are also looking at the volume as well, or things driving the volume. Nigeria has a very, very low we have like a dearth of infrastructure investment, and that just creates a huge market for Dangote Cement and Lafarge to also operate. Our per capita consumption was also very, very low in Nigeria, and that also gives the potential for growth for Nigeria to be able to expand in, or to be able to tap into underserved markets in Nigeria. We're also seeing expansion, or we're also seeing investment opportunities, so investment boom in other countries like Kenya and Rwanda and in other African regions as well. And those markets also portray, or they also give like a bigger market for Dangote Cement and Lafarge to also operate. We are seeing Dangote Cement having operations in about 10 African countries, including Nigeria. And that just shows, or the fact that infrastructure investment is going on in those countries will contribute greatly to revenue growth for Dangote Cement, and also for Lafarge as well. We've been seeing over and over, they have been speaking about the debottlenecking process to be able to free up capacity for their plants and also to increase volumes. And once we see that completed by the end of the year, we expect to see stronger performance from Lafarge.
Definitely something for investors to look forward to. So between Lafarge and Dangote Cement, what is your recommendation? Buy, sell, hold? What?
For both stocks, our recommendation is a buy. We have a buy recommendation, or a strong buy recommendation for Dangote Cement and also for Lafarge. For the like a 1 year horizon, we have a buy
1 year outlook.
Yeah.
But I'm still curious about, some of the pain points. FX, for instance, that is a huge, not just for this sector, across the sectors, but how they've been able to maneuver this particular pain points. And I remember from Dangote's numbers, you said despite the ongoing FX crisis, a net finance cost still fell 17%. Is that the same case for the Lafarge also? Just trying to get to how they're maneuvering the FX situation.
Okay, so one of the main reasons why we saw that net finance cost for Lafarge, for Dangote Cement decline, is they have operation in other African countries, and we saw currencies in those African countries strengthening over the last, or in Q1. And however, for Lafarge, Lafarge doesn't have operations in those countries, so they are still very much affected by the FX constraints in Nigeria. But since Dangote Cement has other operations in other countries, currency in those countries strengthened, and that also we saw like they had like a contraction in FX losses in Q1 period.
Okay. Well, I guess we'll keep our fingers crossed and see how this sector performs going forward. Thank you so much, Abigail, for talking to us today. Appreciate your time on the show. Abigail Alabi, Industrial Goods Analyst for Sub-Saharan Africa at Vertiva.